Hi again and welcome back to the channel. Thank you very much for stopping by. This is the first video in a series that is going to focus entirely on grid trading and grid systems, and it is going to form a playlist on the channel as well. So if you are interested in grid trading, if you are new to this, or perhaps even if you're experienced and would like to get some tips and ideas on how to optimize grid systems for different instruments, you definitely come to the right place. As this is the first video, I've selected 10 frequently asked questions, or 10 topics I should say, that I think will be of interest to people coming into grid trading. It's not a thorough explanation of what grid trading is. We're going to have a look at that in the upcoming video, but I will highlight a couple of things that I think are really important for you to get off to a good start. The first thing we want to talk about is what I call best practice, which essentially is get to know your trading system. So this does not only obviously apply for grid trading, whatever your trading strategy is, especially when it comes to automated strategies, you really need to understand how the strategy works. And that means that once you've found a vendor that you trust and you think the description of the automated strategy is a good match for you, after you download, you absolutely must apply it on a demo account, see it trade at normal speed and get to know how it positions its trades, how it enters and exits trades. That's super important. It's also important to start the optimization process. And if you have a good dialogue with the vendor obviously will be able to help you with settings, configurations, and considerations. That's super important. So why am I saying this? I'm saying this because a lot of people, they buy an automated strategy, they slap it on a live account, and they pray. And obviously what's going to happen is frequently they will look at its trading. If they don't understand it, they might want to interfere or close the trades because they think it looks wrong. You can avoid all that by getting to know the strategy. Remember, automated trading strategy is simply, it's a tool, right? It's the synthesis of a manual trading approach. It's just done automatically. In order for you to get the most out of any tool, you have to understand the tool, find out how it works. That is super important. So the second question we have received a lot over the years is a funny one, because it's not always framed like this, but the gist is, are grid systems magical money-making machines? And obviously the answer is no. If you've been in the markets for any time at all, you will know that every single trading strategy fares well under certain market conditions and not so well under others. Let's take an example. If you are a trend trader, you want to get the most out of trending markets, and you want to get out of markets that move sideways. So for trend trading algos, you're making money when the markets are trending, and you're probably not making money when the markets move sideways. Conversely, with grid systems, we take profit when prices retrace, which means that we're scaling in and out, adding to position sizes. So this obviously fares very well in ranging markets. No, it's not there are no magical approaches to trading any markets. There are strategies that will work well under certain conditions and not so well under other conditions. And that's important to remember that. Another question we received a lot is sort of it ties into the second item. Is grid trading a serious trading approach? And the short answer is depends. If your approach to this trading strategy is serious, well, there's a good chance that it could work out well for you. As with anything else in life, you need to have a serious approach. No, grid systems are not all the same. They vary in terms of feature set, how much you can modify and how much you can configure. The algo, that's one difference. The one we're looking at here, trading, is called the Adaptive Grid Blazer. It's a complete grid system that allows for modification and optimization for different investor profiles. And if you're interested in getting to know this system more, you can click on the link below the video description. We'll take you to a page with more information about this particular system. Generally, I would say there are two, or maybe should I say three groups with a smile. Group number one, we have serious grid systems. That you have to look for serious grid systems, and they fall into systems that are fully featured in a complete feature set. You can also find good systems where the configurations are hardwired. When I say hardwired, it means that the vendor has selected for you the optimal currency pair or the optimal instrument and settings, and then from time to time, I hope you will get updated files or an updated algo with the new optimized sets for the new market reality. I think in general terms, what you want to look for is a fully featured algo where you can change the parameters, simply given that the markets change significantly. So yeah, we have fully featured grid trading systems to sum up, and we have hardwired systems. When I said group 3 is because there are also unfortunately some scams out there in which it's typically hardwired, where you can't forward test, you can only back test, and it gives excellent results on back testing, not so great on forward testing. So yeah, be careful with those. This particular doubt ties into actually the previous item, and the question is my system a legit system, and how to check for that? Okay, so a great thing is to try to have a good dialogue with the vendor. That's a good starting point. I would say that I've found very good systems that were both fully featured, where you can modify settings. I've also found good hardwired settings. One thing though I would be on the lookout for are people who sell algos using the marketing scheme of scarcity. So typically you can find certain vendors on certain forums, and they sell, well, if you buy this week, the price is, let's say, $500. And if you only buy next week, the price will be $800. If the vendor is trying to push out algos this way, it might indicate that this is a hardwired system optimized only for past data sets, and it might not perform in a good or even in a reasonable way if you forward test. So I would certainly be skeptical towards vendors that are trying to push the sale through of the algo. Generally, that's not a good sign. The reasonable account size is something you would have to discuss with the vendor. Depends on the configuration of the grid system, and it depends on your trader profile as well. But as a rule of thumb, you will need some money, as a grid system is a self-financing trading strategy. So what do I mean by that? If you use a traditional trend trading crossover strategy, for example, just as a simple example, you know that you will only have one position open at any given time, and you know how much you risk per trade. But as mentioned previously, when you do grid trading, as you can see on the screen here, we have a varying number of trades open at any given time. And that also means that the exposure in the marketplace varies. Because we're financing our own trading, and because we're scaling in and out of trades all the time, essentially, it also means that we need to have some money to be able to do that, and we need to have some leverage. So the account size and leverage obviously ties in. As a rule of thumb, you would want to have as much leverage as possible. There's still places you can get 1 to 500, 1 to 300 can still be found. Quite a few brokers, they offer you 1 to 100. I think 1 to 30 is on the low side for grid systems. But again, if you have a very large account, you can get away with that. Account sizes, again, talk to your vendor, but as a rule of thumb, the absolute minimum is normally about $1,000, and then $3,000, $4,000, $5,000 and upwards, you will get the best results. The question of what the ideal initial lot size is, there's no straight answer to this, because it depends actually on your account size, depends on how aggressive your trading strategy is when you do grid trading. But again, as a rule of thumb, the smaller your account is, the more likely it is that you're going to use the smallest lot size available on your trading platform. And as your account grows, you can increase that. The multiplier setting is incredibly important because it determines the trading behavior of your grid system. The higher the multiplier is in general terms, the less prices have to retrace in order for you to exit with profit. So why is that? Well, when prices move up, as you can see on the screen here now, we are prone to open more sell trades. And the higher the multiplication is, the less of retracement I need to see before I exit all my positions. You can see here we're at the moment where prices are moving up. And you can also see we're starting to see a bit of drawdown in the equity. And if you follow here on the video, you'll see that in a minute we're going to see a move down where prices fall. And because we have a high multiplier in this particular case, we closed all the positions with profit, and the trading logic restarts, as you can see right there. So the higher the multiplication is in your grid trading algorithm, the less retracement you need. Conversely, the lower the multiplier, the more retracement you need. And there are pros and cons of both approaches. Most grid systems operate with a multiplier of somewhere between 1.2 and all the way up to 3. 3 is quite high. The setting of the algo you're seeing in action here is actually set to 2.5, which in my own personal taste is the absolute maximum I would use in any live account. But again, we're going to get into detailed discussion about that in future videos, the pros and cons of different settings of the multiplier. Risk is controlled in a number of different ways, again, depending on the vendor, depending on the algo you're using and the grid system that you're using. But in general terms, several grid systems offer a way that you can cap the number of multiple trades in a sequence. So you can set the maximum number of losing trades, and you can also set what it does, define what does the algo do if I reach the number of maximum losing trades. Also, there should be a max allowed drawdown. There should be a setting that allows you to tell the algo what should be done if the maximum number of losing trades is reached. So we have maximum number of losing trades, we have maximum drawdown, typically in account currency or in percentage. So those are some of the ways you can generally use to control risk. Now, traditionally, you would have a risk reward of 1-to-1 or 2-to-1 or 3-to-1 if you're doing single trading. But what about a grid system? How do I actually control that? A couple of grid systems, not many. The one you're seeing on the screen here actually has that feature. And what this system allows you to do is to set the risk reward in such a way that if the sum of open trades, buy and sell trades, is a certain amount in profit, we can close all trades and restart the trading logic. So that's a great way of defining the risk reward in a grid system. Otherwise, it is the algorithm and the trading logic that will always determine that. Thank you very much for watching this video. This was the quick overview and the first one in a long series of videos in which we're going to talk about grid trading. See you in the next one, and thanks for stopping by.